You've got a lot to do. Wouldn't it be nice to have a little less on your mind? Eide Bailly can take the pressure off your day-to-day accounting, taxes, data issues, and other business needs. What inspires you inspires us.
This is the Ebb and Flow podcast with Eide Bailly, where you'll find inspired insights on forward movements in the middle market. Now let's get to the show.
Hello and welcome to Ebb and Flow. I'm your host, Clinton Larson, and today's topic is going to be about wealth transition concerns when you're exiting your business. And joining me to talk about that topic is Ava Archibald, Principal in charge of Wealth Transition Services at Eide Bailly. Welcome to the podcast, Ava.
Thank you, Clinton.
So our last episode, we talked a lot about some of the key considerations when people are selling or transitioning their business. And today we're going to take a deeper dive into one of those areas that you definitely don't want to overlook. And that's how you handle the financial concerns in that sale. I'm curious, how often do people have an idea of that side of the sale, Ava, once they have the cash in hand, so to speak?
I don't think that people often look at that holistic approach that they should probably consider when they're selling their business. Oftentimes when someone's selling their business, they're thinking about what is going to be that cash sale amount. But really, you have to think about what's the net tax effect. What's going to be the cash in my pocket at the end of the day after I pay the tax? If selling a corporation, let's say, it could make a big difference if I'm doing an asset sale or a stock sale. And you might want to run those calculations to really know what that net tax amount will be, that net cash amount in my pocket, because that's what's going to affect your family. And that's what's going to affect you for your cash flow going forward. Ideally, if someone's going to look at either transitioning down to the next, say, generation for family businesses, or maybe doing a third-party transaction, if we could visit with that client 1 or 2 years prior to the sale, that's ideal. That gives us some time to look at, what is their family goal? Do they have family members that are stepping in to the family operations? Are they really looking at doing an outside sale? And if you're doing an outside sale, are there things we could do prior to that sale to put them in a better position from an estate tax perspective? Because once we've sold the business and we have cash in our pocket, that's what we have. But if we could do some of that transitioning ahead of time, we can really save families some money.
Great. And so let's talk maybe about like that ideal situation, right? If you say, a person has a year or two ahead of time, they know they're transitioning the business and they have a little bit of runway ahead of them. What are some of the things that you go through with clients and people who are in that stage to get them ready to do what you're saying, to make sure that, when the sale is over, they are set up to reach the goals that they have for themselves and their family?
Well, the first thing we do is sometimes people are so focused on the business, and a lot of our closely held business owners, that's where they've put all their wealth into that business. But we want to look at the whole picture. What are all your assets? Because if you were taking a salary from that business, or you had distributions from the company coming out every year, and now we sell the business, we want to make sure that you still have a cash flow after the business transitions or is sold. And is that cash flow going to carry you through to your future years? We also look at what is your overall net worth? And, my world is looking at transition tax. So that's that gift and estate tax. And if you are over the estate tax threshold, which today is $12 million per person, just over $12 million. But in 2026, that amount is slated to change to about $6 to $6.5 million based on the current law. Under the current law, there's a sunset provision that the estate tax exemption is going to drop to be a significantly lower amount in 2026. So husband and wife could have about $13 million together. Anything over that you gift or die with is taxed at 40%. That's a large tax rate. It ends up to be a big tax bill to pay. Mm-hmm. So if you're selling a business, let's think about, is there a way we could maybe transition some of these business interests, especially if you're going to sell it for a highly appreciated value, transfer it down to your family members now at a lower value. If we're transferring something that's less than a controlling interest, there's opportunities to transfer it with discounts, lack of marketability, lack of control discounts, which really many times can reduce that business value for gift and estate tax purposes by 35%. Where if I've sold it at 100%, I have 100% value in my pocket that is going to be subject to estate tax when I die or I gift it to my kids. But if I transferred it now, maybe ahead of time, we can do that at a compressed value. That way, when you sell it for this appreciated value down the road, that appreciation is out of your estate tax free. At 40% tax rate, that's a big savings. But with that, we always have to think about, we can write the best tax plan to save your end of life taxes, your estate and gift tax. But if you don't walk out the door after we do that planning, feeling like you can continue your custom manner of living, you still have your same cash flow, we didn't do any successful planning for you. So that's where we're taking a look at, if you're going to get out of the business, what's the cash flow or the salary you're taking now? How are you going to make up for that cash flow later? And what is your total net worth? And what's your estate tax going to be down the road for your family? Is there a way we can shift that value now to your kids, still keeping the cash flow for you? It's a lot of moving parts, but if it's done right, we can save the family as a whole a significant amount of dollars in taxes.
Yeah, that does sound like a lot of moving parts. I mean, I was thinking about all the stuff you were just talking about, or in terms of, how you want to transition your business, what kind of effect you want that to have on your current situation, but also your situation, 20, maybe 30 years from now. And then considering also, what kind of estate you're going to leave your family, in that time as well. So, I mean, it does sound like there's a lot of complexity here. So let's start with some of those details you were just mentioning, in terms of if you want to try to transition some of your wealth now ahead of a sale, what are some tips you'd have for people to start to lay the groundwork for that?
Well, first, we're going to look at the operating agreements for the business and make sure that we can obtain the most discounts for gift and estate tax purposes. Because what establishes those discounts for gift and estate tax purposes is really the restrictions or what is within your, let's say, your operating agreements of the business. So we take a look at that. And if that is structured appropriately, then there's techniques we can use where we can sell the business interests, let's say, to a trust and take back a promissory note. And if the trust is structured in appropriate manner, we can avoid any transition taxes in that regard from an income tax perspective. There would be no capital gains on that transaction because the trust is going to be written where I'm still the responsible party for income tax purposes. It can be a significant way to save taxes on transitioning assets to the next generation. Because if I sold, say, my stock to a trust at a discounted value for gift and estate tax purposes, and then down the road sometime, my trust sells that stock at an appreciated value, all that appreciation is out of my estate tax free because I sold it earlier on at this discounted value. That's why we want some time in between. 2 years is great. A year is good. 6 months is still doable. Once you have a letter of intent on a sale or a purchase agreement, now it gets tough to do that type of planning.
That's great advice. And I was thinking too about, in terms of the cash flow stuff you were talking about as well. How much do people have an idea of that when, because I imagine a lot of business owners they're in their business, that's the life they're focused on, when it comes to that idea of the next step. And when you're no longer running your business and you need to make sure you have the cash flow that you need to have to live the life that you want to live. How many people have an idea of what that is, or how many people are surprised by what they might need or what they might need to do to achieve that?
We all think about it. We all think about what we spend on a, annual basis on our custom manner of living, and everyone has a different manner of living. But if you talk to a married couple, even husband and wife many times have a different expectation of what do they need going forward to live on. What works best, I think, with our clients is we have a Wealth One product through Eide Bailly Financial Services that I will partner up with when I'm doing this transition planning so that they can see it up on the screen of here's my value today and my cash flow. If this is what we say we spend on an annual basis and we want to project that out 10 years down the road, our Eide Bailly Financial Services has a program that they can illustrate that for our clients so they can see it in real time. What does this look like on a certain return 10 years down the road? What does it look like 20 years down the road? Maybe I think I need $5 million and that's going to take me out through retirement. But once you start thinking about what I want to do in my next 20 years, maybe that isn't enough. Or maybe I don't spend much, and maybe that 5 million is going to turn out to be 25 million down the road by the time I pass. It's great to see it and to visualize it on a program such as our Wealth One program. I worked with a client once, and he was selling his business, and he had it set in his mind that all he needed was 7 million. Everything else he gave to trust for his children. And we talked about it multiple times. I wanted him to, look at our illustration just so he could visualize it and he'd be comfortable. But he was set in his mind until the day before the sale. Now he did the gift to the Children's Trust. He was going to have net after tax $7 million in his pocket. And he got really nervous that this is not enough money. Why did I only keep 7 million? Seeing it up on the screen and looking on that growth of the 7 million, he would have been much more comfortable seeing that. But it's hard to conceptualize. So
sure.
Putting the numbers to a page or to an illustration, whether a flow chart or, like our Wealth One product, it just lets people see it instead of just conceptualizing it.
That's an interesting point there, because I feel like a lot of people, like you said, would have, maybe they have an idea of what their retirement's going to look like. Maybe they have some goals in mind, but once it's actually real, I feel like it's probably a whole different feeling for people. So I'm curious, like when you're talking to people in this transition phase, they're about to move in the direction of a pretty, life-changing event. So how do you talk to people about those goals that they have for retirement? How do you work through that with people? Because, I imagine, like you said, some people probably have a very clear idea in their head and maybe that changes in a day, or maybe some people just have no idea and they're just like, I don't know what I'm going to need. So how do you work through that with people when you're trying to determine, something so specific as a number and then related to something so, complex and idiosyncratic as your retirement goals?
I try back away the numbers in the initial conversation. I first want to hear what their goals are for themselves as usually a married couple. What are you looking for down the road? Ideally, what do you want to have happen for your family going forward, especially if we took tax off the table? Once I hear a little bit more about them and their family dynamics, then we can back into the amounts they need and the amounts that make them comfortable and let them achieve what it is that they want for their family going forward. Some people may have a set dollar amount that this is all I want my children to have, the rest is going to charity. Or this is the amount I want to make sure that gives me comfort. Might be very different to the couple next door, but everybody has their own comfort level of what they believe they want. So once I know that and what they want for their family, then we can work it out and get into the details and really work into, okay, so what does that look like? And now what is it really that you do need annually? And what do we need 20 years down the road? Are you looking at buying that second home? I notice sometimes husband and wife, when we start having these discussions, there's a big difference of what the wife may want for the family versus what the husband wants for the family. It's great to start talking about those things, because it's hard to have that discussion sometimes. But once we can get their goals in line, we can back in to their cash flow and how the tax will play out and help them achieve what that goal is.
That makes sense. And as you're talking too, I'm thinking too as well that like this obviously isn't a static plan, right? Like if you have a plan for your retirement, year 1, year 2, by the time you get to year 3, maybe you might have a whole different idea of what you want to accomplish or do. I'm curious, how do you work through the changes that are probably inevitable in any sort of wealth plan that someone might have?
Well, I let people know once we have a plan in place, that isn't the end of the line. I mean, if there's a change in legislation, we most definitely want to be reaching out to our clients. Like I mentioned earlier, the estate tax exemption is the largest it's ever been. That I recall it, 12 million, just over 12 million per person, but it's going to drop in 2026 to about 6.5 million per person.
Mm-hmm.
That's a really big change. That's going to change someone's maybe game plan. So maybe we have them set today at a very comfortable place from an estate tax perspective, but come 2024, 2025, we may need to revisit with them. If this law looks like it's going to stay in place, there's a lot of people who might be doing or changing their estate plans to account for that. When we're drafting plans today or working with clients on drafting a plan and doing that kind of tax projection, we're already looking at what does your tax look like today if you pass or gift, or what does it look like in 2026 if this does drop. The other thing to think about is personal lives change. Maybe one of their children will have some difficult health event or something, or one spouse may pass. That changes things. And we want to revisit with those clients when those things happen. The benefit we have in doing estate planning in an accounting firm is we connect with our clients once a year when we're doing their tax returns. That's an ideal time for us to have those conversations and find out if there is that life-changing event where maybe we need to change the plan up a little bit.
That's a good perspective, because I was just thinking that this is also something where and there's certain aspects of a sale that you're going to deal with somebody, and then once the sale is through, then it's a handshake and a goodbye. But I'm guessing with a lot of the clients you work with, you're probably working with them for quite a few years, correct?
Many times, because after they have that sale, life has changed and their financial situation has changed. Sometimes it's education. If it's an estate plan that we've put in place, like the one I described, where we may do a sale to a trust, there's a lot of things we want to make sure that happen correctly, because you can draft the best plan, but if it's not followed through with, you don't implement the plan down the road and take the right steps after the fact, all that planning you did on the front end could be for nothing. And maybe all that estate planning I did is going to come back. You have to make sure you take the right steps. So I always say the key to a successful estate plan is the implementation, making sure people follow through. If you're creating a trust, operate that trust in the right manner. No different than if you create a business, we have to operate the business under the business operating agreements. You have to do the same thing if you're doing any planning with a trust or making any gifting. Make sure you really made the gift. Implementation is key, and that's communication with our clients after the plan is set in place.
So for people who are looking for an advisor for this type of event in their life, what you're just talking through, obviously you want to, if you're going to be working with someone for potentially years, if you're going to be revisiting the plan and creating new goals and new ways to reach those goals, what should people look for in an advisor when it comes to this kind of this wealth transition topic that we're discussing?
Well, I think you want a firm that is going to have succession. So in a firm such as Eide Bailly, I may be retired sometime down the road, but there's a whole team behind me that can pick that up and work with not only the business owners, but their family, their children going forward. Because once you know all that history, we just can do we can do a much better long-term plan for a family when we know there's going to be people behind us carrying on with their successors as well. The other thing to think about is you want to look at someone who can look at that holistic picture. And that's, I think, the benefit of working with Eide Bailly in that we have, not only if you're working with me and I'm thinking about transition taxes, I can bring in our Eide Bailly Financial Services who can look at that cash flow. Maybe we're bringing in the business valuation team to see what kind of discounts we can have in some of this gifting. As you set up these trusts and you have multiple accounts, maybe you're looking at our boss services and on helping you do some of that work in the future. It's nice to have the resources to bring it all together for our high net worth clients.
So ideally, if you have given yourself enough time to think about the questions we've been talking about, to create that plan for the sale of your business and also for an effective wealth transition plan, hopefully you've been very successful in the in the financial side of that. And I'm curious, when it comes down to sort of that final question that a lot of people I think have a hard time asking, but when it comes to transitioning that wealth into the next generation, what legacy do you kind of, pass down? What are some of the things that people should be thinking about when it comes to that sort of final phase of this plan?
I think you need to think about what do I want for my family? And that is different for every family. Some families, it's amazing. It's a number of people that I work with. When they are successful and they've built this wealth, they want to leave it for their family. But one of their main concerns is they don't want their family to lose their incentive to be successful themselves. So part of that is, how do we structure this to give our clients the comfort to, again, transition this wealth in a tax efficient manner, but keeping whatever key goals they want for their family members. And we can do that through so many different ways, through different various entities or trusts, or structuring a trust in the appropriate manner. And if you can understand the mechanics of the trust, it can be a means of, not saying you keep control, but, if I've created the trust in my lifetime, I've kind of guided what I want to have happen for these assets to my children. And sometimes it's giving some assets outright to my family. Some of it's protected in a trust. Some of it is even between the husband and wife. If I have a younger couple, we might want to be sure that upon that second marriage, because if one spouse dies early in life, you have to expect the other spouse is going to remarry. How do you protect this wealth we have today for our current children? A lot of that planning is thinking about that and thinking about the future. There is no perfect family. There's no perfect plan. It's moving parts and making it work for each individual family.
Wow, that's really good perspective on how much work goes into a plan like this. And going back to the beginning, when you're talking about having that 1 to 2 year sort of time frame to get started, it sounds like that's really important based on all the complexities involved.
It is. The one thing I want to stress for our clients is this is a big step when you're looking at transitioning your business. Give yourself enough time so that you can be sure to put that plan in place that accounts for all your family dynamics and gives you that comfort that you've addressed everything you need to for your family.
This has been a really awesome conversation, Ava, and hopefully we've given people a lot of information to think about, because clearly this is a very important issue for any business owner to consider. So thank you very much for being on the podcast. I really appreciate it.
You're welcome. Take care.
Thank you for listening to today's episode of the Ebb and Flow podcast. Be sure to subscribe wherever you listen to podcasts so you never miss an episode. At Eide Bailly, what inspires you inspires us. We provide a suite of accounting, advisory, and technology services with your business in mind. Visit our website to access tools and resources tailored for you. eidebailly.com/ebbflow. This podcast is distributed with the understanding that Eide Bailly LLP is not rendering legal, accounting, or other professional advice. Listeners should consult with their business advisors before acting on any of the information or opinions shared. For audience questions and topic ideas, visit eidebailly.com/ebbflow. That's EIDEBAILLY.com/EBFLOW. Thanks for listening, and don't forget to tune in next time.